Welcome back to U.S. Farm Report. Trusted, timely, tradition.
Well, ag economists' views on the farm economy over the next 12 months, those are turning more positive. At least that's according to the July Ag Economists Monthly Monitor revealed this week. And as weather and feed costs continue to be the biggest driver in the short run, it's geopolitical risks, including what's happening in the Black Sea region this week, that could be the biggest wild cards in the months ahead. As commodity prices experienced more extreme swings this week, the latest Ag Economists Monthly Monitor shows economists continue to shift their outlook on agriculture.
In the very short run, they're saying today maybe a little less positive than where they would have been in June. I think that has a lot to do with weather and general market moves that we've seen over the last few weeks.
But in the longer run, that's where things turn more optimistic.
Yet, when you look ahead of what they expect 12 months from now, they became much more optimistic about where we're headed in front of us. So a little bit of drag here in the short run is kind of what we get out of the monitor this time, but maybe some more positives down the road.
Scott Brown is an agricultural economist with the University of Missouri who helps author the survey each month. He says while most economists remain positive to very positive for the outlook on crops, livestock is where the monthly monitor saw more of a drag.
I think dairy, pork in particular are the two sectors that really stick out, providing that negative on the livestock side of the equation. However, I will say when you think about pork in particular, hog prices have come up a lot, but it's been milk that's really been dragging the worst as we've looked at the last few weeks again.
The biggest concern for livestock producers right now, the ag economists surveyed say it's feed costs.
We continue to see fairly high feed costs affecting profitability. So even in the case of cattle where we're talking record cattle prices, we're not talking record profitability because of the feed cost side. So that's always number one.
The next biggest area of concern is domestic and export demand. And while ag economists lowered their milk price forecast, both cattle and hog prices produced optimism.
I just think when you look at where pork prices have gone over the last month, it's gotten more positive. Now, I don't want to suggest that we're back in black ink, but we have seen recovery in things like the pork cutout value. And I think our economists are starting to share that similar thing, yet they continue to worry about how the general economy will affect demand going forward. But it seems to me that we're seeing a more positive view from a livestock perspective in this month's survey.
Another closely watched aspect of the monthly monitor was the change in forecasting crop yields. Brown says the survey was sent the day after USDA cut its corn yield forecast in the July WASDE report. And this month's survey shows an average corn yield estimate of 174 bushels per acre. That's down from USDA's 177.5, but also 4 bushels per acre lower than what economists said in June.
For me, the interesting piece of this story is there's a lot of variability in the responses that we got back from those being surveyed, which I think just highlights how much weather has been extremely varied as you move around the country. We had yield estimates slightly below 170, some all the way above 180. So it is a wide range.
Economists also cut their average soybean yield forecast by half a bushel, now at 50.6 bushels per acre. That's lower than USDA's current projection of 52 bushels per acre. And while economists know weather is the biggest factor fueling grain prices right now, they are also keeping a close eye on demand.
I think a couple of things stick out beyond the weather discussion, and one is just export demand as well as global competition. What's going to happen from South America in terms of competing with us in those corn and soybean markets? I think the survey participants are highlighting that as important to the mix. They certainly continue to talk about the geopolitical risk in the Black Sea and China in particular, and what's that mean for our ability to export corn and soybeans in particular as we look ahead. Those are really the two big ones that I think came out of this survey.
As tensions seem to be growing between the U.S. and China, the July monthly monitor also asked ag economists if they think the U.S. will enter into a trade war with China.
the survey participants resoundingly said no. We don't think there'll be a trade war with China this year. So that was pretty strong in their response to that. Yet, when you ask them about those trade relations, I think what's happening in Russia and Ukraine and how is Russia's relationship with China at play. Um, you think about China's economic growth. I think we got some quarterly GDP information there that would have suggested lower growth than many expected for China. How do they deal with that? The population demographic continues to change there. I think all those things are at play when we talk about just some of the tensions that likely don't go away anytime soon when we think about what's going on between the United States and China.
The survey also asked economists to list potential events or factors that could shape agriculture over the next 12 months, but ones that aren't being talked about or getting enough attention today. Among the list, weather events around the globe that could warrant a broader conversation on climate, a potential recession in China, renewable diesel obscuring the importance of the RFS here in the U.S., labor issues, and strikes in Canada potentially impacting potash prices. Well, from the possible impact that the heat wave could have on crop yields to why belly prices are now on fire. John Payne and Chip Nellinger are back to talk markets. That happens next.